Alright, so this video is going to be a very unique video. This is going to be the first time I've ever done a video like this, but basically what I want this video to accomplish is to give you some ideas for how to build a potential swing trading through options portfolio to start the new year. Okay, so the focus of this video is going to be focusing on sectors and industries that I think are going to be very bullish for about the next 6 weeks. Okay, so to start this video, we know how the market reacted today to Powell and the FOMC statement. Okay, I have SPY's daily chart up right here in front of us. Very big green bullish candlestick that we can see right here on the daily time frame. It closed above a daily fib level today. Massive, absolutely massive, but not to be really surprised by this. Massive volume bar as well today that we can see 117 million shares traded. However, price closed in this supply zone. So this supply zone is this red box that I have drawn on my chart right here. This supply zone is really where the selling pressure has been really strong. Okay, last Friday, many people, including myself, were fooled a little bit by this bull trap that SPY gave. Okay, it had a very strong bullish close last Friday with volume. It closed into the supply zone. Monday was a big red day in the markets, and we ended up gapping down into Tuesday. We have another close into the supply zone today. That does not mean tomorrow is going to be like last Friday. Okay? I do want to go over some upside targets for SPY because the general reaction today was extremely bullish. It was an extremely bullish reaction from SPY and just the market in general, not just from SPY, but the market in general, both from the FOMC statement and when Powell talked. So the FOMC statement came out at 2 p.m., and then Powell started talking at 2:30 p.m. Okay, market reacted very, very bullishly to both. Okay, so I want to go over some upside targets for SPY, and then I'm going to start diving into the hot sectors and industries that I see value in. I'm even going to drop specific trades that I think you can take that offer very low risk with the possibility of very high reward. Okay, first upside target for SPY is going to be all-time high. That is 473.54. Once price closes above all-time high, there are three upside targets that I want you to pay attention to. The first upside target is going to be $480.24. The second price target is $483.73. And last but not least, the third upside target that I want you to pay attention to is going to be $488.76. Okay? All of these three upside targets are valid once price closes with a daily candle above 473.54. Once we get this close above 473.54, we're going to start a new melt up for SPY. We're going to set a new all-time high. Remember this melt up that we saw right here after the September onslaught that we went through? Okay, this very long melt up that the market gave us. Well, guess what? I'm expecting the same exact thing this go around, and it will lead to 488.76 printing eventually. Okay, I cannot put a timetable on that when it will happen, but once we get that close above, once this new melt up, low volume melt up begins, that is my third and final price target for SPY. Okay, so the specific options, now I'm going to start diving into specific sectors and industries and the very specific options that I see value in. Okay, they're all going to be January monthlies. Okay, so when I say monthlies, it's going to be the third week expiration for that month, which is actually going to be the third Friday. So for January, that specific expiration is going to be January 21st, 2022. Okay, so that is the expiration that I'm going to use for all of these trades that I'm going to walk you through. Okay, now when you use monthly options offer you the most liquidity. Okay, because remember, as an options trader, there always has to be a buyer and a seller for every single option out there. Okay, it's unlike shares, there always has to be a buyer and a seller. Okay, monthly options have the most liquidity. Hedge funds, institutions, institutional traders, and even retail, most of the time, not all retail, but some retail traders only focus on monthly options. So you're never going to have to worry about liquidity being an issue for these options. Okay, so to get this started, the first sector that I think is going to perform really, really well for over the next couple weeks is actually going to be oil and the energy sector. So I'm going to flip my chart around to crude oil futures, okay? And I want to go over, let me rearrange my fibs here real quick, and I want to go over /CL, which is light crude oil futures. Now, this is all technical. This is a technical-based video, okay? Now, if you trade the oil sector, there is a certain degree of fundamental analysis you have to take into account, okay? You have to watch the news because I've traded oil before and I've been on the wrong receiving end of OPEC news and being bullish with oil, okay? So you have to pay attention to that. But this is a sector that, or a sector or industry that I see a lot of potential in over the next few weeks, okay? /CL from a technical standpoint, look what I'm drawing right here. It is bull flagging on the daily time frame. Here's your flagpole. I'm not going to get my chart super ugly by drawing a flagpole, but here's your flagpole, and there is your bull flag right there on the daily time frame for /CL. Okay, now this bull flag, I'm going to lock my chart back in here now, actually comes at a really interesting point in time. This bull flag is forming under technical resistance, which is the 21 EMA. Notice the rejections that price saw on December 9th and December 13th off the 21 EMA. Price is bull flagging right below it. After today's action or price action in the market, let's see follow through to the upside. Let's see follow through with bullish momentum the rest of this week. The oil sector is probably going to follow suit. Okay, futures are small green right now. They don't really matter right now. They matter at 4 a.m. and 7 a.m. But futures are small green. Actually, crude oil is up the most besides gold and silver. Crude oil is up already almost 1% on the night so far, and the night is very young. So far, oil is off to a bullish start. It's bull flagging below technical resistance. From a technical standpoint, that's a high probability setup. Now, let's look at upside targets for crude oil, okay? Because we're going to be, one of the specific options that I'm going to be dropping for you guys that I see value in, it's an oil stock, okay? Crude oil is bull flagging below technical resistance of the 21 EMA. Once it can close above the 21 EMA and it turns that technical resistance into technical support, $73.34 per barrel is on deck. These are the three upside targets afterwards. The 55 EMA is also going to be technical resistance, but once this bull flag breaks out, I don't see it being too much trouble, especially if no bearish fundamental news comes out for oil between now and whenever this breakout gets started. Okay, once we get a close above $73.34, here are my three upside targets: $76.31, $77.86, and last but not least, $80.08. So yes, based on this bull flag breakout and the market momentum switching to the upside, I'm anticipating crude oil to be trading at $80 a barrel eventually in due time. Now, I'm not calling for that this week, but I'm calling for it eventually in due time. So this is something to watch. However, let's look at a potential position or trade that I see value in. And I'm going to be watching with my team and I for the rest of this week for a potential entry into. Okay? And this specific option that I see value in, and I'm going to pull it up on my phone so I can walk you through some of the finer parts of this option, is ExxonMobil. Okay, this is the oil stock that I see a lot of value in. Okay, so the specific option that I'm looking at, and again, this is very low risk, high reward for all of them. Okay, this is probably going to be the cheapest, lowest risk one that I'm going to drop tonight, and it's going to probably offer the lowest reward possible of the three, or of the four tickers that I'm going to be going over. Okay, I just had to look at my chart real quick. So the specific option that I see value in for ExxonMobil is going to be January 21st, 65 strike calls. Today they closed on the ask at 76 cents per contract. Okay, the open interest for this option is a whopping 54,874. Okay, there is clearly a lot of interest and a lot of options traders paying attention to this option. Now, we never know what open interest, it could be bearish, it could be bullish. We never really know with open interest. But from the TA standpoint, with how crude oil futures are looking, and I'm about to walk you through ExxonMobil's TA standpoint as well, I see a ton of value in this option. Okay, if you are new to swing trading, if you want to try out swing trading and you want to have low risk in all your swings, this is going to be the best possible swing trade that I'm going to go over in this video. That's for you. Okay, this is the lowest risk that you don't really have to worry about. If you are brand new to swing trade, never once have done a swing trade before, just buy 1 or 2 contracts wherever your comfort size is for this. Okay, it's less than $100 per contract. It closed today at 76 cents. By the time the market opens tomorrow, there's a good chance it will be opening at a different price. So keep that in mind. But this is a very low risk option that I see value in. Now, let's talk about ExxonMobil from the TA perspective, okay? Because there has to be a reason you enter this trade based from technical analysis standpoint or fundamental, right? It can't just look good on the option chain. There has to be more than that to enter. Well, ExxonMobil looks very, very good on the daily time frame. Okay, let's start with today's daily candle. Clear, present buying pressure, solid volume bar came in, long lower wick to the downside, and look where price bounced today. This is huge. Price bounced off of $60 today. $60, that is a big fat psych level. It ends in a zero. $60, it's even. It is a huge psych level for a mid-cap stock like ExxonMobil. That bounce was huge. Buyers were waiting there, and they stepped in to buy the dip. That was a huge bounce for ExxonMobil today, and it closed itself back above this trend line. This is a descending wedge that I put my team on earlier this week or last week, I forget which one, and we have actually been trading ExxonMobil quite a bit over the last couple of weeks, specifically for this descending wedge breakout. Okay, look where this bounce came into. It came on the bounce of this retest of this resistance trend line of the descending wedge. A descending wedge is a bullish reversal pattern. Okay, price broke out as we can see right here. However, overall market sentiment from last week and into the beginning of this week did not match the breakout, so it held ExxonMobil back, especially with crude oil futures bull flagging. Okay, that's also going to hold oil stocks back a little bit. If crude oil isn't moving, it's going to be harder for oil stocks to move. Okay, look at the retest. Old resistance. Look how many rejections price gave at this top resistance trend line. Okay, here we got rejections right here. We got more rejections, and we even got 2 rejections right here before finally breaking out. Okay, look at the retest today. Old resistance is now new support. Here are your upside targets for ExxonMobil. First upside target is $61.91. Your second upside target is $62.76. Third upside target, $63.61. Your fourth upside target, $64.83. Your fifth and final price target for this potential long trade for ExxonMobil is $66.38. If a low volume melt up starts in SPY and for the entire market wide, oil stocks are going to be participating. The energy sector is going to move with the breakout market wide. Okay, so you write down these upside targets if you decide to enter this option. And again, I'm going to say this option one more time. January 21st, 65 strike calls for ExxonMobil. Very low risk. For every option that I go over in this video, they're probably going to offer the lowest reward. But say you enter with 5 contracts, okay? You enter with 5 contracts. Each time you hit a price target, or price hits a price target that I just listed, which is a daily fib level to the upside, you take 1 contract off, so you're locking in profits, okay? By the time that the calls go in the money, you have 1 contract left. Enter with 5 right now. It wouldn't be a terrible amount of premium that you're putting into it. Okay, it'd be less than $500 depending on your account size. Okay, if you're new to swing trading, whatever it is, again, this is a low risk mid cap stock. I walked you through the TA setup with oil. I'm walking you through the TA setup now with ExxonMobil itself. Each time that price hits an upside target that I just listed, Sell one contract and lock in profit. That way you're minimizing risk and you're locking in profit. Once you lock in profit, the market cannot take it away from you. Okay, now I want to move on to the next sector that I see a ton of potential in for the rest of this year and over the next couple weeks, and that is Bitcoin miner stocks. Okay, Bitcoin and miner stocks in general have been some pain in the butt to trade lately. Okay, I've been doing nothing but buying equity lately, and of course, dollar cost averaging in to any crypto name that I am invested in. Okay, Bitcoin from a TA perspective. Okay, looking at it on the daily time frame, price is still making lower lows, but it's beginning to bottom out. Okay, we can see right here, price has been holding $46,000 really, really well. Okay, of late, the past couple weeks, it's held $46,000 really well, especially the past 4 trading days. Okay, it needs to get above the 9 EMA. The 9 EMA is technical resistance right now, but it's not rock solid technical resistance. It's not the hardest technical resistance to get over. Price and buyers need to get price over the daily 9 EMA, close it above the daily 9 EMA, and then we can start looking at some major upsides for Bitcoin. Now, in all seriousness, this is probably going to require a catalyst to help out. I don't know what kind of bullish catalyst Bitcoin can possibly look for, whether it's inflation keeps rising, so it's being looked at more and more as a hedge against inflation. Okay, I don't know if Elon Musk is going to come to save the day for Bitcoin bulls, and he's going to get kick Bitcoin into high gear with one of his tweets, whatever it may be. Bitcoin needs to break out. Once Bitcoin breaks out, look at all these daily fib levels that I have right here. They are upside targets. Now, here is a potential options swing trade that I want, or that I see low value in, and that I want to enter. There's a good chance I'm going to enter this trade this week with my team. Okay, and this specific option is going to be January 21st, RIOT blockchain, which is a Bitcoin miner stock, 30 strike calls. Okay, now let me pull up the option again on my phone so I can talk to you about the option premium real quick. All right, so this option is going to be out of the money, so we're going to be lowering the cost of premium, which is going to bring down risk a little bit, because the less premium that you're spending, you do lower the risk a little bit. Okay, now I do want to say this very clearly. If you do decide to take this trade, you are entering miner stocks. Miner stocks are very volatile because they have 2 different markets pulling on them. IV is consistently high for all miner stocks. Don't be surprised if IV, when you enter this option, is around 90 to 100%, but that is normal. Okay, I know it sounds really, really weird for me to say that, but 100% IV is normal for Bitcoin miner stocks. Okay, and the reason being is because they have 2 markets constantly pulling on them. They have Bitcoin always pulling on them, and then they have the regular stock market like the S&P 500 and its price action pulling on them as well. Okay, that's why IV is so high. Okay, so this specific option closed today worth $2.60 on the ask. So it is a lot more expensive than ExxonMobil. Okay, but take this into account. If you've only got a $500 account and you want to day trade every day, you're probably not going to have the patience for this swing. But if you've got a $2,000 account, a $5,000 account, and you want to get into swing trading, or you want to test your patience swing trading, this is a very good setup and opportunity for you to take. Okay, so this option closed with a volume of 2,000 volume on the day today and over 6,000 open interest. So RIOT is not the most popular miner stock. Marathon or Mara is probably the most popular, but RIOT's a solid number 2. So I'm not really surprised by the low volume and lower open interest. But again, this is another setup that I see worthwhile. I just talked to you about the bull case for Bitcoin. Bitcoin is still making lower lows a little bit on the daily time frame, but it is bottoming out, and it is starting to push into technical resistance, and there's a lot of upside for Bitcoin. Let's look at RIOT. RIOT is also bottoming out, okay? This is a long-term demand zone that RIOT has bottomed out in. Let me break price out here real quick on the daily time frame, and let me get rid of some of these rectangles real quick. Okay, Let me draw this for you real quick so you can see it really well. Look at this long-term demand zone that price fell into, okay? Price bounces right here, June 8th, out of this demand zone. Let's look at it right here. July 20th, price bounces out of this demand zone. We can see an accumulation phase taking place in this demand zone through the middle of October. Price bounces out and leads to highs it hasn't seen since the spring and late winter of 2021. Price is back in this demand zone now. It is very, very reasonable to assume a new accumulation phase is going to take place. Look at this accumulation phase right here. Okay, we're talking about January 21st expirations. You don't even have to worry about time decay. Theta is a non-issue right now for this trade. Okay, this accumulation phase right here, quick estimate, it lasted 2 weeks and price pops and it moves, let's say, $25 to $33. It makes an $8 move to the upside after accumulating for 2 weeks. Within 1 week, it makes an $8 pop to the upside. Okay, if we get a similar move right now, an $8 move to the upside from a closing price of $25.87, guess what? Your 30 strike calls for January are in the money. Okay, if it accumulates for 2 weeks and then it takes 1 week to break out to move $8 or whatever it is, because price is now back in the demand zone. Remember, this is a demand zone. This is where buyers begin accumulating shares for an accumulation phase to bring price back out to the upside for an uptrend to a reverse trend, because it has been downtrending for some time now. An accumulation phase is where they begin to reverse that. You have, say, 2 weeks of an accumulation phase. Theta is still a non-issue. Remember, they have to accumulate Bitcoin as well to break Bitcoin out, unless they get a really strong catalyst that can kind of jumpstart it. Okay? It would really take nothing for RIOT to follow Bitcoin with a really bullish week, and these 30 strike calls would be in the money. Okay? The only reason I'm saying like medium risk is because you have to worry about the Bitcoin markets. You never know with crypto and Bitcoin. It's a very volatile market. So I'm saying this particular trade, medium risk, high reward. Okay? For this particular setup. Now, another sector that I see performing really, really well over the next few weeks is small cap stocks. Okay? Small cap stocks, the small cap ETF, which is IWM. If you've never known that, I suggest you start paying attention to it. Okay, IWM is the small cap ETF. Okay, we all love to trade small caps, but you may not know that you have to watch the small cap ETF. Okay, small cap stocks that we all like to play: Uber, PLTR, Fubo, just to name a few. If you like trading those names, you need to watch IWM, because IWM can give you confirmation on the trend that those small cap stocks might be making intraday. Okay, and this can help you save money or not to enter a trade. But let's look at IWM here real quick. Okay, IWM has fallen into a demand zone that it has been working with for literally almost a year now. Okay, only a few months. Only this in January, this is going to be a year using this demand zone as a loading zone to take price back out, or to break price, back out to the upside. Okay, look at all these dips that IWM gives in this demand zone, and then it pops it back out to the upside. Okay, this is a very large demand zone, and look where price fell into today. It fell into this demand zone, and look at this massive volume bar. Okay, IWM, January 21st, 230 strike calls is the option that I'm looking at for IWM. Okay, for this potential swing trade. Now, this is going to be the first one that I've gone over in this video that's an actual ETF. So, same rules apply as far as TA goes. Okay, you have to always watch market sentiment and all that good stuff. Okay, but based on the reaction today from Powell and FOMC, guess what? The market priced it all in. So unless there's any surprises all of a sudden, unless Powell announces next week that they're raising rates in 2 weeks, guess what? That's a very negative reaction that the market's going to have, because it's not priced in. But right now, the market digested everything that Powell said, and we saw the reaction today. Overall, a very, very bullish reaction. Okay? First upside target for IWM, $220.20. Second price target, $224.84. Third price target is $228.59. After this third price target, our 230 calls would go in the money. Okay, and just to reiterate this specific option one more time, January 21st, 230 strike calls. Guess how much they closed for on the ask today? They closed for $2.12. You might be thinking this is a really cheap ripoff, and it is. IWM options are really, really cheap. This is a low risk, high reward swing trade. Okay? The volume on this option today was insane. Over 18,000 volume on this option today. To match that with the open interest, let's see what it was. 39,000 open interest today, matched with 18,000 volume. Clearly, big money is moving into this option. Low risk, potential for high reward. Keep in mind how much time you have on your side for this option. Okay? Now, we all know, we all love to trade the technology sector. Okay? The tech sector has been red hot lately. You know, we all know what Apple has been doing. Everybody loves to trade the Fang Man stocks. Well, here's one that goes under the radar for a lot of people, and this is Visa. Visa has been particularly beaten down lately. I mean, this thing took a brutal beating. It probably cut itself by what, a quarter? I mean, it cut itself off by a quarter for what it used to be worth, right? All-time high, roughly. I think this was all-time high, around $252 per share. It's been really, really beaten down lately when the overall market hasn't been doing this, okay? But Visa put itself into a descending wedge that we can see right here on the daily time frame, and guess what? The breakout is here, and it's done. Visa broke out of this descending wedge, so the move is not over by any stretch of the imagination, okay? This breakout of this descending wedge, look how massive this descending wedge is. There's a whole lot of upside right here for Visa to make. Just because the breakout's already started, it does not mean it's over. Okay, now I want to start talking about Visa's price action a little bit as I zoom in. Look at the daily candle that Visa gave today. Well, actually, number one, look where it's been held up recently, this week and on Friday. It's been held up at the 55 EMA, which is technical resistance. That hold up and the pullback that it's seeing, or the consolidation actually underneath, is cooling off the stochastic RSI, which is much needed, so price can continue moving higher at a healthy rate. Look at today's daily candle. It's a bullish engulfing daily candle below technical resistance with volume. Visa is probably gearing up to see another big breakout above the 55 EMA. Here is my fourth and final high probability option that I see a ton of value in. January 21st, Visa 230 strike calls. Okay? Let me pull up this option real quick on my phone. Guess how cheap these things were. This is going to be the second cheapest one yet. Okay? Today on the ask. Now this option spread is a little wide. This is going to be the widest spread of the four that I talked about. So if you go to enter any of these options that I talked about in this video, watch your fill price. Don't get filled on the ask, because particularly for this one for Visa, it's got a $14 to $13 spread between the bid and the ask. If you get filled on the ask, you're automatically going to start red. Okay, with this kind of wide spread for this particular Visa option, you're probably going to start red either way. But if you lower your limit by $3 to $4, maybe even $5, you can really limit how red you are, and that way it doesn't screw with your mental state as a trader. Because some people, when they automatically enter when they automatically enter a trade red, it can screw with their mental game a little bit. So to help avoid that, don't get filled at the ask, bump it down by a few bucks, and see if you can get filled. Okay? These calls, these 230 strike calls for Visa, January 21st expiration, closed on the day at $1.35 per contract. Low risk on this one. The volume today, 147 volume. Okay, Visa's not the most popular stock with options traders. Okay, remember, everybody loves Fang Man names. Okay, Visa's not the most popular, but the open interest on this option is telling. Over 17,000 open interest. Clearly, people are interested in this option. Okay, that is telling. Now, keep in mind how much time you have on your side with this. Okay, theta for this option, it's negative 0.05. So if Visa moves down $1 from Theta, you only lose $5 off your contract. Incredibly low risk. You don't have to worry about time decay. All right. Once Visa's daily candle closes above the 55 EMA, that's turning that technical resistance into technical support. Here are your upside targets to use for Visa. Once you get to close above the 55 EMA, $216.82 is your first price target. Your second price target, $224.08. Last but not least, your third and final price target for this Visa trade is $233.33. That means these 230 calls are in the money by over $3. Okay? That is probably it for this video as far as stock or specific options that I wanted to go over, because you may end up taking all of them. You may end up only following one of the specific options that I walked through. Okay, but let me run through the sectors and industries one more time. My hot picks basically for the next few weeks for January monthlies and to close out December is oil, Bitcoin miner stocks, small caps. I did not say it for Visa, but I see fintech companies being very bullish over the next couple weeks, and I think you're going to see a lot of money start pouring back into them. Now, fintech companies, there's quite a few big dogs that fall into this sector. Okay, Visa and MasterCard are two of them. Watch for PayPal and SQ to also start getting a lot of money moving into them as well. So look at these January monthly out of the money calls for MasterCard. MasterCard only for big accounts. That's a very large cap stock. Big accounts, 10, 15 grand and up. MasterCard swings would be good for you. PayPal and SQ, 25 to 5 grand plus size accounts. Those would also be good ones as well. Visa, if you're mostly a day trader but you want to experiment with swing trading, you have to hold yourself to it, but a $1,000 size account could do this swing trade comfortably for Visa. You just have to keep in mind how long you're holding this option for, and you have to have patience, okay? Time is on your side for all of these options. You just have to have the discipline and the patience to follow through with them, okay? Follow your own profit-taking rules, okay? Each upside target that I gave you for all of these potential trades, when I walk through each of these tickers, those can be places where you take profit if you decide to go in with multiple contracts. If, let's say, Visa hits $224.08, that was my second price target for these 230 calls. If Visa hits that price target and you want to lock in profit, by all means, go ahead and do so. Okay? Don't break your own profit-taking and risk management rules just because I laid out upside targets and they haven't been hit yet. If you're happy with profit, lock it in. Nobody can ever fault you for that, okay? Nobody ever went broke locking in profits and all that good stuff, okay? Pay yourself along the way. Please, don't let any green trades turn red either. That's a big pet peeve of mine. Don't ever let a green trade turn red, okay? Follow your own stop loss rules, okay? At the recording of this video, the market looks very bullish. I went over SPY's reaction and upside targets as well, based on Powell and the FOMC statement. The rest of this week, it could be the total opposite, and all of these setups are busted. Okay, I can't predict the future, but I recorded this video because I want to give everybody the opportunity to buy some really cheap, out-of-the-money swings that can potentially return 100% plus profits. Okay, all of these options, low risk, high reward. Manage risk appropriately, okay? Don't load the boat if you're not used to swing trading on these options, okay? Because if you like day trading and stuff, don't load the boat because you're probably just going to start getting pissed off that you're not making money right away. But this video is specifically for you're new to swing trading, or you want to, if you needed some help identifying swing trades, okay? I just walked you through 4 different swing trades that you can look for yourself or that you can enter as a swing trader, okay? If you have any questions for me about this video, please leave them in the comments below. I will be more than happy to answer.